Good afternoon, everybody, and welcome to this webinar. Good to have everybody on board with us this afternoon. My name is Carl Taylor. I'm a consultant here at Oldfield, and I'm joined on this webinar by Joe Brewer, who is consulting partner here at Oldfield. Hello, Joe.
Yeah, hello, and welcome to everyone. See so many on.
Yeah, brilliant. So thanks everyone for joining us. It's great to have everyone on board. So the last few months have been a tough few months for many businesses. Some businesses have been struggling with a massive increase in demand, which is kind of quite a nice problem to have, while others have suffered a significant blow of reduction in sales. But through all of this, the big question is, how have you been looking after your biggest asset? So for anyone that's in business, our people are our biggest asset. And it's so important that we look after them, particularly at this time, this challenging time. So just to kick the webinar off, I just wanted to do a really quick poll, just to get a picture of where everybody's up to, how things are going out there. So the question is, what percentage of your workforce are currently working from home? So I'm just going to launch the poll now. So we just want you to fill in there. Are more than 50% of your workforce working from home or less than 50%? So we'll give everyone a few seconds to get voting. Okay, looks like we're nearly there. Okay, so we're going to end the poll and share the results. So that's interesting. So we've got 67% of you on the webinar saying that less than half of your workforce is working from home. So that's an interesting result. So that shows that we're at a stage now where we're starting to see more people actually getting back into work. But there's still got the other 30% there, still a significant chunk that are working from home as well. So that's interesting. Interesting just to gauge that, get the feel for how that's going. Because really we were sort of thinking about this as a team here, and we were just reminded of that great quote from Henry Ford. You can take away my factories, you can burn up my buildings, but give me my people and I'll build my business right back again. So we just thought that was a really good quote. Some businesses will feel like they've had everything turned upside down by the coronavirus, but if you've still got your people, then you've got everything you need really to rebuild your business. And then there was another quote from Andrew Carnegie. Take away my people, but leave my factories, and soon the grass will grow on the factory floors. But take away my factories and leave my people, and soon we'll have a new and a better factory. So again, that's just a really good quote that just helps to highlight the importance of our people. They're an incredible asset to help us rebuild our businesses. And it's key that we're recognizing them, rewarding them at this time, so we can really harness the power of our people to rebuild and bounce back. So how does that all link to what we're talking about on this webinar? Well, this webinar is really all about helping businesses to reward employees in a tax efficient way. So it's about helping businesses to get the maximum reward into the hands of the employee in a tax efficient way, so the employee gets the most out of it while minimizing the cost for the employer. So that's what we're going to be talking about. That's the focus of what we're going to say. So it's a really simple agenda we've got. We're going to start by going over the small but effective wins. So these are the small things you can do to reward employees tax efficiently. They're small, but they're effective. They're important that we don't forget about them or miss them. And then we've got 3 big wins that we're going to go over. So some more exciting, more significant things you can do to reward employees in a tax efficient way. and then we're going to have questions and answers at the end. There's going to be plenty of time for questions at the end, so feel free to put your questions in as we go through in the question and answer box. Don't put it in the chat box, put your questions in the Q&A box, and we'll address those at the end. And we will be sending a copy of the slides and a recording by email later this afternoon, so look out for that email that will be coming with a link to the recording and the slides. And just before we dive into the detail, just want to very quickly give you some brief background as to who we are, because realise we've got some clients on this webinar, and we've got some non-clients who won't have met us before. So just to give you some brief background, we are accountants and tax consultants based in Coventry, and we help our clients with two things. One is we help our clients with strategies to maximize profitability and generate more cash. And we also help our clients with smart tax saving strategies to help them reduce tax liabilities and keep more of what they earn. And particularly at this time, our focus is really in helping businesses to navigate and win in today's challenging times and beyond. So we're going to kick off with the small but effective wins. So there's three small effective wins I'm going to run through. As I say, it's just they're small but they're important. So the first one we've got here is trivial benefits. This is something that a lot of businesses forget about using, and it's actually a really good tool to get some reward into the hands of employees in a tax efficient way. So trivial benefits, what are they? What do they mean? Well, what this is, it means it's a provision that allows us to give gifts to employees worth up to £50 per gift, completely tax-free. So it's a really good tool. There's no limit on the number of times that you can award an employee or give a gift to the employee in a year. There's no sort of actual limit on the number of times you can do that. There is a limit on the number of times you can do it for directors or their close family, but for normal employees, there's not actually any limit. But there is a few criteria that you need to make sure you meet. For one thing, it can't be a bonus for hitting performance, so it can't be performance related. It can't be a reward because the employees hit their sales target, because they've hit their call numbers. It can't be that. It's got to be a genuine gift. So it's got to be for some other reason, like, in recognition that it's been tough working from home, or it's somebody's birthday or anniversary or something like that. So it just can't be related to performance. And then it can't be a cash gift. So it's got to be non-cash. So it can be, a physical gift like a bunch of flowers or bottle of wine or hamper or whatever, as long as it's not worth more than £50. Hasn't cost more than £50. And it can be a non-reloadable gift card, or it can be vouchers that can't be exchanged for cash. So that is a really useful tool, isn't it, Joe? We find it's a really useful tool, a really useful thing. It's quite small, but it's good.
Yeah, it's helpful, Carl. Certainly is. We use it ourselves, and also recognise people's birthdays, encouragement, gifts, and that kind of thing. And we've seen it used quite a lot, haven't we, with our clients as well, and we encourage it. So, like you're saying, you might be getting a parcel delivered to someone's door whilst they're working at home. Encourage them. Hamper, bottle of champagne, as long as the value, like you're saying, is no more than £50. And like you say, a gift card up to £50 is perfectly acceptable. So that's good.
Yeah, that's good. So there doesn't have to be a particular reason per se for giving the gift, but it just can't be related to performance. That's all. It can't be. bonus for hitting the target. That makes sense. So the next small but effective win we're going to talk about is working from home allowance. Now, again, this is something that not a lot of people actually know about and not a lot of people use. But again, it's a really good way of getting some money into the hands of employees in a tax efficient way, or indeed tax free. So under this provision, employers can provide their employees with a tax-free allowance of £6 per week or £26 per month if they are required to work from home. So, simply the employer can pay the employee £26 per month for every month that they're actually required to work from home. And this is the amount for the 2020-2021 tax year. It's just intended to be a flat rate, just to cover costs such as utilities and telephone calls, etc., that employees are incurring as a result of working from home. And the employee doesn't have to keep records of utility costs or anything like that. You can just pay them this allowance and it's completely tax-free. So again, it's just another good small win. And if, as the employer, if you decide you don't actually want to pay that to the employee, well, the employee can claim that amount against their income for the year, so they can do that, by putting it on their tax return. If they actually do a tax return along with sort of gift aid donations, pension contributions, they can also put this working from home allowance on their tax return, claim it against their income, and get a tax deduction for it. So again, it's another useful little tool to either get deduction or to get some money into the hands of employees. That's free. Then the final small but effective win we've got here is an employee suggestion scheme. Again, it's a little known provision for rewarding employees for making good suggestions. So the idea is that you have to roll out a staff suggestion scheme across your whole staff, and employees then make suggestions, ideas for how things can be improved. And there's two types of reward that you can give under the suggestion scheme. Number one is encouragement reward. So if an employee makes a good suggestion, it shows good merit. It shows that they've been thinking about how we can improve things around here. But as a business, you decide actually you can't actually implement that idea for whatever reason, you can give an encouragement reward to the employee of up to £25 per idea, completely tax-free. So that is useful. And yes, it gets money into the hands of the employee tax-free, but also helps encourage more ideas to come through. Helps to just encourage that culture of innovation. And then we've got financial benefit awards. So the idea of this is that an employee puts forward a suggestion and you can calculate what you feel the idea is going to make or save the business. And then you can reward the employee for up to 50% of the saving that you expect to make in the first year, or 50% of the extra profit you expect to make in the first year of implementing the idea. And so you can give that reward. It is capped at £5,000. It is subject to a few other conditions, but ultimately you can get up to £5,000 into the hands of an employee tax-free if they make a good suggestion that will make or save the business enough money. So that is really useful. That's quite significant. So that's, again, something that's little known, but something that you really should take away and think about implementing. So that's just 3 small effective wins. And there's no reason why you can't really take those 3 things away with you and implement those in your business and get the benefit, and your employees get the benefit of those provisions. So I'm going to hand over to Joe now, who's going to talk about the bigger wins. Thanks, Joe.
Yeah, thank you, Carl. And I think that's really helpful to go over what you might say are the small tax efficient things that you can do to reward and encourage your employees in these challenging times. Seems like they're not quite over yet. So I wanted to touch on three, you might say, big wins, or perhaps more structural type ways of rewarding key employees tax efficiently. And when we say key employees in this connection, we mean sort of indispensable employees that you really want to reward ongoing, above and beyond a normal or commercial salary. So there won't be time to explain them all in immense detail, but if we could run through these key three big wins, would give you some value in this webinar, and there'll no doubt be more questions and more detail that can follow, but it's quite exciting to be able to roll these out. So firstly, the first big win that we wanted to go over was really about ownership in the business. So consider rewarding your key employees, maybe managerial staff, by a small or minority ownership share in your business. And this could be really quite insignificant in terms of the value of the business that you're actually giving them, but it could be quite obviously very tax efficient, and also there's other advantages as well. So for example, it could be a gift of a few shares in a company, or maybe even selling them a few shares in your company, or maybe making them partners in a partnership, or members in an LLP, which is obviously a limited liability partnership. So you obviously have to look at your business structure and see which fitted you best. A minority ownership has the following advantages. It will help ensure that that employee remains with you for the duration. So they're far less likely to jump ship and move to competition or move to another job if they are, you might say, locked into some sort of form of ownership. And it's a way of rewarding them without actually paying out cash right now. So that's particularly pertinent, isn't it, in this situation that we're in? Maybe we've had good times, or maybe we're actually short of cash right now, but you can reward them by giving them shares, or as we've said, a small amount of ownership, instead of actually parting with a lot of cash. So it's a way of conserving cash but still rewarding the employee, if that makes sense. There's obviously considerable tax savings, as we've said, as a shareholder or a partner. We can obviously structure it so there's very, there's tax and national insurance savings, quite significant national insurance savings, and also tax savings to be had on the portion of the earnings which we obviously put through this arrangement. And recognition, I think that's quite important. Where we've got a key employee, it's important to recognise their status. You might say they are an integral part of the business. Their goals are aligned with ours, and we want to recognise the hard work that they've done in helping us to get to where we've got to and taking us where we want to get to. So by actually giving them some ownership, you're actually recognising, formalising, you might say, your appreciation of them in that way. Just a note of caution, please be careful. Obviously you need tax advice, you need legal advice, you need proper lawyers to help with this kind of thing, to draw up agreements and find a way of including them without risking your existing business. So we'd particularly recommend a robust shareholders agreement in the case of a company, or a partnership agreement in the case of an LLP or standard trading partnership. So I hope that makes sense so far. Carl, anything to add to that?
That's good. No, nothing to add at this stage.
The next quite exciting point I wanted to go over was employee share plans. Now, that's something that maybe we've not really explored too much as business owners before. But I think the question to ask here is, what would your business achieve, or what could it achieve, if your key employees acted like shareholders? So we know as business owners, we have ambitious goals. We want to grow the business. We know what we need to do in terms of growing the sales, profitability, and so on. What if all your key employees, management team, maybe key people in the business, acted like you do, acted like a shareholder? What difference would that make? So I think the answer there is, if you don't feel comfortable about actually making them a director or a shareholder in your business, an employee share plan is really the answer. It's a much softer entry, and it's a way of utilising some of the benefits that we talked about in ownership reward. So an employee share plan allows your employees to really have an option to purchase a small piece of your business. And there are 5 key wins in it. It's a controlled plan, so it's highly controlled from the outset. And the first point is, it aligns your employees, as we've said, with your business goals, so that your success is really their success as well. And that's proven. It's a proven fact that grows a business faster than anything else, if you've got your employees aligned with your business goals, with the goals of the business owners. The second point, very important, is employee retention. It is a proven fact that employees on a share plan are far less likely to leave than just employees who are not. And the reason for that is obvious, that the share plan runs for a period of time. It might be 2, 3, or even 5 years. And you're really kind of locking those employees into a scheme, a plan that will actually be a benefit to them. So if they suddenly decide to leave partway through, they're obviously forfeiting their right to the benefits of that plan. The third point is tax savings. They are very considerable for an employee share plan. Not easy to describe in a sentence, you might say, but they are. You can take our word for it that there are significant tax savings. And the reason for that is that we're moving some of their income from income tax regime into capital tax regime, and the rates obviously in capital taxes are significantly lower. So that's the reason there's such a huge tax saving. The fourth point is, it increases the value of your business. And one of the reasons for that is, as well as the increased performance, one of the reasons for that is it's actually moving some of the remuneration you might give to those employees from out of wages, which is an expense area in the business, to a profit distribution, which is obviously below the EBIT line in your calculation. So it is actually a proven fact that it increases the value of the business. And the fifth point is that there's no cash actually needs to change hands at this point in time. So that's really helpful, as we said earlier. Just at this point, when you might need all the cash you can muster, to be able to incentivize, retain employees, give them a real boost without actually parting with any cash, has to be a winner. We are holding a dedicated business value event on the 6th of August. I think that's called Business Value Accelerator event, and that will be on the 6th of August. So we'll send a link to a kind of a register your interest form after this event, and please kind of register your interest in that. We'll obviously be telling the full details of of our employee share plan on that in that event. So please join us for that, and we'll tell you the full story. And the third point in the big wins is around bonuses. Now, that's a familiar Sorry, I've just been corrected. It's actually the 5th of August. Sorry about that. Anyway, you'll see that on the link as it comes around. The third point is around bonuses. Now, bonuses are obviously something that we're quite familiar with. The concept of a bonus, if you want to pay staff more, you want to give them a reward. A conventional bonus done through PAYE is a well-trodden path, I guess, for most of us. But here we're talking about a slightly different way of making a bonus. Again, to conserve cash, you could commit to a bonus but then defer the payment. And bonuses can be deducted from company profits as long as they're paid within 9 months of the accounting year end. So the key point here is that you can reward your employees. Maybe you've got an employee that's helped you make extra profits during this crisis, during this time, or an employee that's gone, you might say, above and beyond their call of duty in keeping the ship afloat. Maybe they've covered for workers that have been working from home or furloughed or even off sick. Maybe they've actually covered for someone else and gone above and beyond, put in extra hours, etc. What you can do is obviously agree a bonus with them, but actually defer the payment until next year. So the way this works is it's a bonus pledge, and you commit to the amount that the payment's deferred. You formalise it now, assuming let's give an example, your company year end is say December. You can pay that bonus anytime up to September 2021, so that's September next year, almost, well, over 12 months obviously from now, you can still make that payment. So that could be really useful for you, just to conserve your cash, because obviously 2020, we still don't know how that's going to pan out in full. It could be a way of conserving the cash and at the same time rewarding and motivating your staff. The final point on bonuses is what we call a pension bonus. So whilst the conventional bonuses have no great tax benefit, there is one small benefit to making a bonus, by the way. It's worth pointing out. If you make a bonus as opposed to a wage rise, it does actually save the employee national insurance contribution. So if you were thinking of giving an employee a wage rise, say for the rest of the year, consider deferring it and putting it into a year-end bonus, because that does actually save the national insurance, or can do, usually does, saves national insurance, employees' national insurance on the amount. So that's worth bearing in mind. But what we were going to speak about next was pension bonuses. So that's a more tax efficient way of paying a bonus where that fits with the employee's circumstances. So just to run through that really quickly, if you've got an employee who's contributing to a pension scheme, that can be their standard auto enrolment scheme, or maybe they've got a private pension fund, or whatever it may be. You can offer to pay the bonus as a pension contribution. And the advantage of that is, whereas normally a normal bonus, there's employee tax and employee national insurance to pay on it, and also employer national insurance. None of those things apply if it's a pension bonus. So it's a way of topping up their pension pot without them paying any tax or national insurance. And furthermore, it's still fully tax deductible in your business. So that is a really smart thing to do if it fits with that particular employee. So really that was rounds up bonuses, I think, Carl, unless you've got anything to add to that one. Can you see that being useful right now?
Oh, that's good. Yeah, they're all really useful ideas that we must take away and think about. They're probably things that business owners don't think about as a way of rewarding employees, but I think it's important that we do. We must think about these things and implement them, because of the various ways that we can get rewards into the hands of employees tax efficiently. And there's the added sort of benefits of helping improve the sort of business value and so on as well, and that go along with some of those points that you talked about. So that's great. 3 big wins that we can take away. So just before we move on to questions and answers, I just wanted to do another really quick poll, just to get a bit of a reading as to what everyone's feeling about what is likely to be your biggest challenge in your business in the next 3 to 6 months. So I'm just going to launch the poll now. So it's now open for voting. If everyone can just put in what they think their biggest challenge is likely to be in the next 3 to 6 months. So just the first one that comes into your mind as you look down that list. And just tick 1. Okay, I think a few more seconds to get the full results in. Okay, I'm going to close in 5 seconds. Okay, I'm going to end the polling. Okay, interesting results there. We can see those. We've got the biggest one says lack of sales being the biggest challenge. So that's an interesting one. Then we've got the second one being cash flow. And then we've got the third one being systems and operational issues. So that's interesting. Interesting results there. Hopefully that's interesting for everyone else to see, whatever everyone is feeling at the moment. So I will just stop sharing the results. Good. So we're going to move on to the question and answers very shortly. Just quickly before we do that, I wanted to mention that we're offering a free COVID action planning call following this webinar to anyone that's interested in having a further conversation with us. There's a link on the email that's going to come after this webinar. You can really easily book in a time to catch up. We're more than happy to speak to you. If you'd like to talk about any of the points we've covered as well, any of the points on tax efficient employee remuneration, and how they might work in your situation, feel free to get a call booked in. So questions and answers. We've had a flood of questions coming in, which is brilliant. We're going to answer those for you. So we've got a question here. Should the working from home allowance go through the payroll? It's a good question, but it's not a taxable thing. It doesn't need to go through the payroll, because PAYE doesn't apply to those payments. It's a bit like if you were making mileage allowance payments to an employee who's using their own car for business use. It's similar to that, if that makes sense to everyone. Joe, does that make sense?
Yeah, sure. So certainly don't put it through the payroll. Treat it like an expense reimbursement, effectively, an expense claim. Yeah.
Exactly. Just to cover off quickly on that, it's probably worth just pointing out, you can only pay that allowance if the employee is required to work from home. So if the employee is just volunteering to work from home, then you can't pay that allowance, or you can, but it won't be tax-free. So just bear that in mind. Obviously, in this situation, as it stands at the moment, still the government guidance is that everyone should work from home unless they can't. You know, as it stands at the moment, it should be fairly easy to justify it. But as we move forward and as the guidance changes, you just need to bear that in mind. Okay, more questions. We have to whiz through these relatively quickly. So is there any limit to the number of encouragement rewards we can give to an employee? So that was, I think that was going back to the staff suggestion scheme, where there's the £25 encouragement reward if an employee makes a good suggestion but you don't implement it. No, there's not actually any limit to the number of times you can do that, but it's obviously the £25 limit is per idea. So you can't just give them £25 because you feel like it. It's got to be that they've submitted a new idea. You've looked at it. It looks like a good idea, but you can't implement it for whatever reason. Then you can give them the reward. Anything to add to that, Joe?
No, I think that's clear.
And there was just another question relating to that. On the other type of reward, the financial benefit award, the one that's up to £5,000, and there was just a question about, does this only relate to suggestions which were implemented? And the short answer is yes. You can only give a financial benefit award if you're actually implementing the idea. Another question we've got here. What are the tax savings of implementing an employee share plan? Joe, don't know if you've got comments on that one.
You say what
are the tax savings of implementing an employee share plan?
Okay. Well, the main point of an employee share plan is actually not to save tax, if you like, is that's not the main point. Although the tax savings are substantial. The main point of doing it is, I think, as we said, to retain and motivate key employees and help grow your business. I think that's by giving them a sense of ownership and you might say a stake in your business, so they can be rewarded as the business succeeds. And of course, this does mean that the tax they pay on the rewards is much less than if they're paid through a bonus or through the payroll. So you might say the biggest tax saving is the employee's rate of tax, which is obviously could be 40, most likely 40% in this situation. And there's also the employer's national insurance of 13.8%. So there's two big tax savings. It's obviously a bit more complex than that, but that is basically, if you add those two together, you get some idea of how much tax you're going to be saving.
That's good. Okay, one or two more questions here. Okay, an interesting one here. Can you give a trivial £50 bonus every day? Which is an interesting question. The first thing perhaps is just to say, look, remember it's a gift, it's not a bonus. So you don't want to use the word bonus in there. It's not a bonus, it's not relating to performance. A trivial benefit is meant to be a benefit or a gift that you're providing to an employee that's not related to performance. But to do it every day, I think would be pushing it. Would you think, Joe?
Yeah, I might wrap that up with a couple of other questions that have come in as to whether we have to have a reason as well. And I think the answer to that is we don't have to have a reason for it. But the main thing is not to give it the wrong reason, if that makes sense. So it's definitely not a reward for hitting KPIs, not a reward for hitting sales targets. It's not a bonus. And in answering can you do it every day? The answer to that is no. In fact, if you were to do it at the end of every month, that would most likely be deemed to be income. So I think you've got to think about it as a more occasional and you might say erratic thing than that. Just, is it someone's birthday? You know, have you had a particularly good month? And therefore you're feeling disposed to make a discretionary payment to all of your staff, you know, send them all a gift box or something. Someone raises the question, are you allowed to make a £50 gift and then carriage on top. Well, whether you deliver it yourself or use a courier to deliver it, I don't think matters. It's the value of the gift. So the £50 is the actual value of that gift. And the best way to test the value of the gift is how much did you pay for it. So if it costs you another £3.50 to deliver it to their door, that's not a problem. So sorry, it's not easy to give a definitive answer on how often, but just kind of use a little bit of common sense, not as often as every month, I would say. As long as it's less often and more irregular than that, it should be fine.
Good. There was just another little question there. What's the limit for number of trivial benefits, gifts that you could give to directors and shareholders? Just to cover off on that one quickly, it's £300 per annum for directors or their close family.
Total value of gifts in a year, yeah.
Yeah. I think we're nearly there. There's just another one. There's just another two that we just probably want to quickly cover off before we finish. One was on deferred bonuses. Can they be pledged at any point in the year? And is this a commitment to make the bonus even if the profits for the year turn out to be very poor?
I think in that situation, if you're worried about your profitability for the year, you might want to wait till the end of the year. You might want to reward based on actual performance for the whole year, would you say, Carl? Would that be prudent?
Yeah, that's right.
But certainly once you get near the end of the year or even at the end of the year, if you commit to that staff member to make a bonus payment, you've got, not just bear in mind, you've got the 9 months to actually pay it. I think that was the point we were making. And someone asks if it's all right just to touch on it while we're on that point. Can I explain why a bonus saves national insurance as opposed to going through as a pay rise? Is that all right just to touch on that quickly? The reason for that is that the national employees' national insurance has a monthly threshold. So it has like a monthly maximum at 12%. So if you think about it, once you're up to, I forget what the figure is it something like £4,000 or something for the month, you reach the upper limit for national insurance. So if your employee is normally on, say, 3,500 a month, if you put them up to 4,000 a month, they'll be paying national insurance on that £500 a month. Whereas if they're on 3,500 a month and you say, no, I'm going to make them a £5,000 bonus for the rest of the year, if you like, most of that bonus will be free of national insurance for them, or at least only 2% rather than 12. That's where the national insurance saving comes in. Is that clear, Carl? I hope I'm confused everyone.
Yeah, no, that's good. Yeah, it just literally means that it's likely that more of the bonus will be taxed at 2% national insurance for the employee as opposed to 12.
Correct.
It's kind of a little bit counterintuitive, but it's just the way the whole thing works. Good. We're probably going to have to wrap up the questions now. We'd love to be on here answering questions all day, but everyone's busy. Appreciate everyone's busy. We don't want to keep you on for too much longer. There's just one other point we wanted to cover before we wrap up. Now, it's just to touch on what Joe mentioned earlier about the Accelerating Business Value event that we're running. I'm on the 5th of August. It's just to explain what that is, just so everyone knows. We ran some events last year, one at Canary Wharf and one at Gatwick, and we're just carrying on in the same vein. Only this time it's going to be an online event as opposed to an actual physical face-to-face event. And we've got some lawyer guest speakers lined up. And we're just going to be covering the legal, tax and financial aspects to accelerating the value of your business. Because we've suffered interruptions in our businesses over the past few months. And now is a great opportunity to rebuild our businesses in a way that we want to build them, in view of maximising the value of them. And what we found is a lot of business owners kind of regard the value of their business quite passively, as though it's something that we can't change or we can't influence. But actually, you can influence it. You can set a target for what you want your business to be worth. And if you plan ahead and do what is needed, you can get that. So we're really going to be covering, the drivers of business value, how you can influence the value of your business and actually hit a target for business value.
Do you think it's fair to say that the time to start thinking about that and planning that is now, isn't it?
Yeah.
There's no point thinking in 3 years' time, wish I'd thought of this earlier. The time to plan business value is now, basically.
Yeah, exactly. And we're going to cover off on some of the key sort of legal and tax pitfalls as well to avoid when buying or selling a business. Obviously, sort of acquisitions, buying businesses is a bit of a hot topic at the moment, with some people sort of talking about acquiring maybe some competitors that have been struggling through this period. So some interesting and exciting ideas coming out in this event. So you can register interest on the email that's following this webinar. But thank you all very much for joining us this afternoon. It's been brilliant to have you on board, and we'll look forward to keeping in touch with you. Thank you very much.